Okay, I think we should be. I think we should be live. Somebody can confirm on Twitter for me. I mean on YouTube for me. I just need to find. Okay, here it is. Should be. Okay, just gonna make one good post here on Instagram, and then we should be ready to go. All right, awesome. How's everybody doing? Hope everybody is well. Hoping we got some good case studies to review today. But for the most part, for me, because it was CPI week, I will say it was a bit slow for the most part. Gold didn't really give me many. It gave moves. It just didn't give me many good moves over the past week. So my executions were very limited. I actually didn't think I was going to take a position this week, and I kind of got caught up in a bit of choppiness. I believe it was Tuesday when I first. No, this was Wednesday. Sorry, right after CPI. So for the most part, I do kind of enjoy trade, not necessarily trading news, but trading the movement after news, if that makes sense. Let's see. So you see here, I was looking for a short based on right. I was looking for a reaction, right? Confirm reaction, internal range, giving me a movement to a bullish POI within a discount of the overall range. Before this had given me this move into the upside, I was actually looking for a move into the downside. I mean, a move into the upside. Sorry, I was looking for a bounce into the POI. But let me just see. Let me just show you guys what the result was here. The result here. What the fuck? Ooh, I don't know what. Sorry about that. But unfortunately, I kind of got trailed. I hit my trailed stop on the way to my take profit. I did get the initial reaction that I wanted, right? The initial reaction here, right? But just because we have the initial reaction does not mean that we move our SL. You guys know that. We kind of have to wait for a CBOS continuation because it creates an internal range. here, which means that the internal range is something that we could play off of, or it's pretty much giving us the reasoning as to whether we should continue to hold or not. So once the internal range was confirmed, I can move my invalidation here. And then from there, I'm kind of expecting this to kind of just give me the move that I want. And then obviously after we have the internal reaction here, we create a new internal range, then I can move my SL again. And I really could have really taken another position. I mean, I could have moved my trail stop here for the third time because there is an internal LGC here. So because there's an internal LGC here, if, right, this internal LGC does not create a bearish move into the downside and it breaks here, if it is to not do that and it is to do the opposite and give me, right, a bullish break, then I'm now looking at, let me delete this. I'm now looking at a high low retracement, unwillingness, break, which means a potential structural disruption. And that alone is enough for me to justify closing the trade. So bit of a mistake on my end. I should have trailed my stop here, but it is what it is. Right, and we move on. So originally what I was looking at, right, for the day was, I believe there was a M5, M15. I think it was maybe M30. Yeah, it was M30 actually. There's an M30 POI here. I was looking at potentially what can happen within this range, right? And within this range, right, we clearly see liquidity being built, a potential accumulation schematic per se. Let's just put it that way, right? We have relative equal lows being built. We have them being swept and then an internal transition causing the sweep to be confirmed. I just didn't find an entry after the sweep was confirmed, right? So the sweep is essentially confirmed technically here, right? Why do I say there? Because obviously we have liquidity being built, but internally this is still bearish, right? So I have to anticipate, right, that this low is still going to be ran. So once we have the move here, that solidifies this as the pullback high. So we have high, low retracement. Therefore, we should anticipate this low to be ran through. But obviously that did not happen. We had a sign of unwillingness and a sign of structural disruption, which that confirms the sweep because we had a failed transition here. I just didn't find anything here to base my trade off of outside of a educated guess, right? So I just wasn't able to take a position there. And then even then, once it was confirmed, that's why I highlighted, right, this bullish POI, because this is the final sell to buy. So I'm like, you know what, if you're to even top here, right, I'm going to take this into, right, a premium pricing POI, right? So that would have been my first position, but it actually missed by like literally a pip, right? Literally a pip. So my original idea was to go off the sweep, right, and potentially hold into the POI, and that would have been my first position of the week, but unfortunately that didn't happen. So what I had to do after that was I still had this POI noted, right? So I still had the POI noted. I was looking for a reaction based on the buy to sell wick here. We had the buy to sell wick. We have a confirmed reaction, right? We have an internal structural range being met. There's an inefficiency. There's a buy to sell. So really, I'm taking the inefficiency with my with my SO at or invalidation, which is the previous solidified point, right? And I'm aiming for, right, the POI present here, right? So then that goes on to what I just explained on how I should have moved my trail stop here, and that would have secured me about a 1 to 1.2, but instead it just secured a 0.7. So it's not a loss, but it's also not necessarily a winner. Bit of a choppy trade, I will say. I will say maybe wasn't the cleanest model per se. I felt like I was kind of chasing this a bit. So as long as it wasn't a loss, then I guess, you know, it's fine. But any questions on this first trade? Yes, no? You guys understand where I'm getting this idea from? If there's anybody on the YouTube, if you guys want to ask any questions. I have both chats open. So do you guys understand where I got this trade idea from? Yes or no? Okay, cool. Cool. So that was the first trade of the week. Bit sloppy, didn't like it. But my second trade of the week was actually very good. This was here. This was here. Right, so I'll show you guys the entry. The entry was, in my opinion, very aggressive based on my standards. My entry was solely based on price action here, right, which is a bit uncharacteristic of me. But I was also continuing internal structure because we have low, high, retracement. Therefore, we have the anticipation of, right, the high being ran. That's essentially where my target is, right? Because obviously if we're following continuations, right, if we are here and this is to continue trend, we are guaranteed here. If it is to continue trend, right, we're guaranteed here. Why? Obviously because we don't know if this is going to give me a brand new full-on leg, or I don't know if this is going to give me a sweep model. You know what I mean? If it gives me a sweep model, then obviously I would then hit break even, right? But I know that if this is to continue, right, its structure and it's to continue the low high retracement fulfillment, then I know that this previous high I am basically guaranteed. Are you looking at the higher time frame? Not necessarily, bro. I personally don't care for H4 or H1. The high, like, I mean, as you saw right now, the highest I went was M30, but just for a point of interest, right? Because I'm really just bouncing between the major intradays. The second trade, I'm explaining that now. So my execution here was solely based on, right, the engulfing candle here, right? And if we were to zoom in a little bit, actually, I'll just show you guys in the chart right now. But if you see the engulfing here, I said, you know what, there's a sweep internally and there is a engulfing right after that. I think this is, you know, pretty much right where it needs to be. We've swept 2 levels of liquidity. We're also continuing higher. Yes, there is no buy to sell supporting me, right? So that's why I say it is a bit aggressive. I am being a little bit aggressive. I could have been a little bit more conservative, and I can show you guys what the conservative entry would have been. But this is more so me kind of going on a hunch, saying that, oh, we've swept liquidity. I know that the fulfillment of the leg is still completed. I know that there hasn't been a sweep here. If there was a sweep here, right, let's say, right, we obviously, let's say confirm here, that obviously confirms the high. If we were to then take out the high without taking, right, the external high out, and then we break through, that would pretty much make me not entertain any continuation longs, because this is this is a reaction that did not fulfill the leg that we were looking for. So I would need a pretty big transition here in order to justify even continuing back into the previous high. So for the most part, right, my execution here is liquidity has been swept. I know that my direction is bullish, right? And I know that based on the internal sweep, we can also see that there is an engulfing, and I'm kind of just taking my bet based on that. So the result of this actually ended up being relatively favorable. It actually hit my take profit. I think it's the first time in like 2 weeks that I've hit a TP, so pretty happy about that. But like I said here, right, we came back in to mitigate, right, before the engulfing was confirmed. We came to mitigate that, and then internally, right, I tried not to get too confused, right? I try not to say, okay, we have an LG here, then I'm going to move my stop loss here. No, I typically don't like to sit on the second time frames when I'm in an execution, because obviously you could even argue that there's a structural level below the micro, and I don't want those movements to kind of confuse me into forcing me to move my stop loss, only because you guys must understand that the market is fractal. So that means that there's models inside of models inside of models. That means there is movement inside of movement inside of movements. So just because there might be an internal structural disruption, maybe if that's from a micro, let's say there's a micro structural disruption that could only be generating, or that could possibly be generating, right, a scalp pullback, and then you're kind of just focused on the external continuing its direction, right? So I try not to zoom too in, because if we look at this here, even just at the 15, right, this was where my execution was. You can see that we ran liquidity, and then we gave an impulsive move via the engulfing on the 30-second time frame, and it came back to mitigate the inefficiency. But you guys know I don't really like to be extremely picky with or I don't like to be relatively perfect with what I am looking for. The only reason I stopped doing that is because I'd rather just get in the trade and win the trade than get the best possible risk to reward over time, right? Because obviously I can force the risk to reward to be really, really high. But I'd rather have the peace of mind of knowing that I'm going to enter the trade. And if I enter the trade based on some type of model, then I know that I am guaranteed a reaction. And if that reaction is in alignment with the external direction, then I will more than likely take out the previous structural high, right? So the peace of mind of that is kind of what is really helping me out here, especially because, for example, if I was to take this trade, the barrier of entry to get into this trade is probably 5 seconds, right? And even if I was to execute here, because of how fast this is moving, this is the 15-second time frame, right? I might end up getting an entry here or here. So I'd rather just have the peace of mind that within these 2 minutes, I can just hit the button, right? But as we can see right here, right, we did not take out a previous low, right? So because we did not take out a previous low, this is not a CBOS. So we still have low into high retracement to a new high. So once this low that created a new high is broken, that is a CBOS. So because that is a CBOS, and then here from this is to create a new bullish move, this internal LG could be considered an LGC if you're being picky about it, right? That is my justification to now move my stop loss from my validation into here, which is essentially kind of like a break even. And then from there, zoom out a little bit, we can see that there is an M2, so an M2 POI here. So in my opinion, if I was to have held just a little bit longer, in terms of holding myself from executing, I really could have taken this position, and this is my high probability setup. Why? Because this has now been shown to be solidified after the creation of the internal LGC. Not to mention the internal LGC gives you a perimeter to play off of, and we have a clear target at play. And that would have justified, right, a quick 2-to-1 or 2.4 to 1, right? And this would have been my conservative entry. And then once to create the expansion move into the upside, I can now move my invalidation here, right? And then I can move it here as well if this was to have not hit take profit. So any questions, concerns with the second position? What was the duration of this trade? 20 minutes. Oh, no, I'm sorry, not this one. Sorry, not that one. It was 35 plus 17, about 42 minutes. I mean, 52 minutes-ish. Cool. Any questions, concerns with the second trade? Conservative one makes more sense. 100%. 100%. This is definitely much more textbook. Right? And not to mention, there's order flow here as well. You can see the POI here. Right? Reaction creates a model, comes back into discount. You have a clear target at play. I don't know. I didn't actually look into this, but because we're kind of reaching all-time highs, this is a problem that I had with when I was trading SPX and NOS. I think I only did it for like a month anyway. But it's just whenever a market is essentially reaching all-time highs and is still bullish, I find it relatively difficult to gauge how far I'm willing to hold, right? Because let's delete this. I could have easily probably held this a bit long, right? I could have held this way longer, right? And that's where it gets a bit confusing, because if we zoom out, right, we're at all-time highs. You know what I mean? We're at all-time highs. And this is somewhere that I do find difficult to kind of just measure where the next expansion move is going to come to, right? Because we're at all-time highs. So it's just a bit difficult to gauge whether or not you should hold. Just because of the uncertainty that you don't know when something will reverse, but that could have easily scaled up, right, into a pretty high risk to reward trade, right? And without no external, let's say a daily high that I'm reaching, I do find it hard to gauge those types of moves. So, but definitely a work in progress. Work in progress. Yeah, no clear target. You're kind of just holding and praying. So maybe you can hold from maybe you can hold a, let's say, like 30% of the position and kind of just trail your stop as you go. Let's say you have CBOS continuation. Okay, let's move our stop. So for example, right, if I was to follow that framework here, let me see. I don't like how choppy this has been over the past weeks or so. So you say we have CBOS continuation. Okay, let's actually move our stop loss there. Let me actually, I can move my stop loss here. Next, where is the next CBOS continuation? Okay, there's a CBOS here, continuation, so I can move my stop loss here once that high is broken. Right, we have CBOS continuation, I can move it here, right? And then internally we have CBOS continuation. So once we have CBOS and we break the new high, I can move my trail stop here. Right now we have CBOS, CBOS, CBOS. Right, CBOS, CBOS, CBOS. So we come back into a turbulence point. So once this is to then break here, right, I can now move my stop loss here. And also there's an internal CBOS continuation there, LGC. And then that could have justified another addition to the position here, right? So if I would have trailed my stop here, then this is where I would have had my trailed stop be hit. Right. And the reason why this happens is because obviously we don't know when, for example, if we're doing the trailed stop CBOS continuation from a POV of a minor intraday, once the major intraday gives you the CBOS, that means that you have a minor intraday potential reversal BOS, right? So that could be the case here where the major intraday could be solidifying itself and then giving a move into the upside. So that would have ended up being about a 1 to 10, right? Yeah, I would have held through, let's see. Yeah, I would have held through one set of swap, would have held into the new day. But yeah, it's a work in progress. We will see. But other than that, do you guys have any questions, concerns, or do you guys have any case studies you guys want to review? I'll pull up the Discord chat as well if you guys are open on there. And also just make something clear. This is the plan for from here on. I'm hoping to do these calls around this time, which is 11 a.m. Central Texas time, which is 10 a.m. Eastern, I believe. So that's kind of the plan now. It's a good time for me because it's morning time and it's also a good time for the people in Europe. So that's kind of why I'm sticking to this time. So just every week, kind of expect the same time, 11 to 11:30, and then kind of just go from there. And if you are on the live stream, I know you can't send any charts on the YouTube chat, so feel free to join our free Discord. Just go to the trading lounge under the interaction English section, right? And then from there, feel free to post a case study. I take this trade today. Why did you try your stop there? I do think it's a bit blurry. I find it hard to see your candles. do find it a bit difficult, but I do see directional bias is bullish. CBOS, I do see that you have an LG that's a CBOS, meaning you still have wherever you want to measure a high, but let's say high, low, retracement. So you still have to anticipate this low to be ran. Once this low then breaks here, that's unwillingness, and that creates an internal structural range. And you're taking it based off of here, the continuation of order flow. Me personally, I would have taken it based on the internal LG here, because now that you have the structural range, this could be, excuse me, argued as an LGC. So no matter where you take the position, whether you want to take the entire sell to buy, or if you want to take a POI and have the invalidation here, you have a perimeter, and I would put my stop loss here, and that would be here. So this is right now. Let's actually go check that out. I do like it. I do like it. I do think your TP will get hit. So I see, so this is what I mean, right? Obviously we have the break of structure here. Break of structure, or CBOS, sorry. CBOS, so I have to anticipate this high to run into these lows, right? Unfortunately, that did not happen. You have order flow disruption here. And then you have the internal range that we talked about here, right? So once you have the LGC pattern, I can argue that I will potentially take this into the new high. This would have been my position here, right? And I do see, right, a continuation break of structure here leading into a new high. So I would move my trailed stop there. This is where I would have moved my trailed stop to. Right, I wouldn't have trailed it right away, but because you're so close to the take profit, 100% I would have already trailed it here. Right, and depending on how crunched for time you are, I would even trail it even a little bit higher, because you're kind of securing profits. Because the one thing I hate, right, this is the reason why I do CBOS con, and then to trail my stop, but then once I'm close to my TP, I do immediately trail it, because the one thing I hate to see is a very deep POI give me a reaction like this. You know what I mean? Which would, if I was holding break even and I wasn't trailing my stop, I've now wasted all of this focus time and I got nothing to show for it. So whenever price comes close to my take profit, I am very, very keen on trailing my stop as much as I can, because I'm guaranteeing profit at that point. Does that make sense? Yeah, so I hate that. So just to avoid that, I trail it immediately once it starts getting close to my take profit. But yeah, overall, good position. No complaints there. Just it's a bit hard to read your chart, that's all. Why is this a sweep? Why is this a sweep, and why is this OFD? I need you to start showing me these like one at a time, bro, because it's a bit difficult to go back and forth in the chat. Why is this a sweep, and why is this OFD? Okay, it's a different one. It's a different one, yeah. We have one more. Okay. We'll take these one by one. Yep. Are you typing, or can you not hear me? What am I saying here? Why are you saying this is sweep in OFD? Right, like this is important, right? Because I'm not saying you're wrong. I'm just saying I'm kind of just checking you to make sure you know what you're saying, right? So this is
Okay.
correct. Mm-hmm.
Because after we took that low, we had a model.
Mm-hmm.
We had another flow model played there, so that's why I felt it was a sweep model.
Mm-hmm.
So,
You're correct because there is a sweep and then there is an internal SD here, which means there is a failure there. So the OFD is extra, right? Which is still good. But the issue is now is like this is a sell to buy move, so you have to take the sell to buy. This is why I don't go based on POI. I prefer to go based on the sell to buy. If you got the sell to buy here with the target at hand, because obviously if we sweep one level of liquidity and then have a sweep model, and then obviously I take the buy based on the buy, I mean the sell to buy, that I would probably aim for here, right? And this is what, like a 1 to 4, 1 to 5. So that's what I would have done here. I would have used the entire sell to buy.
okay, I'll take that into account. I felt maybe that was the sell to buy because that was the last sell candle I saw before
It's not a
went up.
candle,
So I
bro.
thought,
It's not a candle. It's a range. Where did the sell to buy start? It started here, right? Why do I go based on the top of the wick? Maybe there's no body here because maybe this is the higher time frame inefficiency, right? Yes, maybe the candle and the order flow may be here, but the inefficiency is here. So maybe from an M30, M45, maybe you see, right, an inefficiency fill here.
okay, thank you, noted.
Okay, H4 POI, M5 OFD. Unfortunately, this just didn't give the move into the downside, right? You see, like, I would have waited for this, but unfortunately, just didn't get it. Unfortunately. Like, the bias was correct, everything was correct, except for price not coming back into the POI. So this one is just part of the game, it happens. I wouldn't complain there. I wouldn't try to alter rules just to fit this one trade. I would say, hey, it's all good. Didn't work out this time. Just keep doing what you're doing. I have no complaints here.
I think I used the wrong POI then, but since you've shown me the right POI to use, because in the next chat I used the wrong POI, but
Okay.
I've seen my mistake.
Yeah, it would have been the same thing, right? If I used the zone, it would have been the same thing. Right, and then obviously you're aiming for the previous high, which is there, or at least here, which is where equal highs are at, and then there's a POI here. But yeah, it's okay. I wouldn't stress over that. I would just keep doing what you're doing. And then this was an LGC. Nice. This is an LGC. Right, so you have a CBOS, right? Confirmed LG, internal LGC, right? And you use the internal solidified point to give a perimeter. So I'm not opposed to this. It's not as high of a probability as, let's say, that first position you showed me, the OFD sweep. But it's still technically textbook, technically. West Coast timing is go in my opinion. Where in the West Coast are you? Sorry. Where in the West Coast are you? Ah, nice. A before after. Nice. See, this is you did what Isaac should have done in that OFD trade. Instead of looking for a POI, you use the entire sell to buy. So I'm not opposed to this at all, right? Because yes, internally you have a bearish move, And from here, you have a sign of unwillingness that then breaks structure here, creating an external range here and the internal range here. And that came in straight and hit your TP. This is great, man. I really like this. Very, very nicely done. As long as you acknowledge that this is unwillingness after this break of structure, that gives you the directional bias here. Low, high, and then you come into the retracement. Because if you really wanted to be conservative, like let's say, let's go back to the first one. Let's say you're aiming for like a high out here, a major intraday high. Then at that point, I would use the entire sell to buy here, and you're looking at a major intraday position slash swing. Right? But this is good based on the perimeters that you were setting for yourself, right? So not opposed to this. Yeah, so I do see what you're saying. In my opinion here, right, you have to know that internally this has not been confirmed. So for example, right, let's say we have this pullback, then we have the pullback of that internal move, and then we have a bullish move, and then we get a reaction, then we come back down. Okay, now I'm not opposed. I mean, now I'm not taking this position. If there is a failed reaction, because this is a bearish LG, so then I would anticipate something like that. That's the only way I wouldn't take that. If there is a failed reaction, right? Like let's say, and by reaction, I would say if any of these lows had broken and then taken out a high and then came back into the POI, then to me, that's a failed reaction. But yeah, man, just trust your bias, trust your gut. Okay. Okay, there is a sell to buy here. I do see that sell to buy there. The one thing I don't like here, the one thing that would make me hesitate a bit is the fact that we have high momentum coming into the POI. That's something I don't like. You usually need a little bit more. I would like to see maybe a sweep or maybe an internal transition and then take my position, something like that. Yeah, high momentum, it's like it throws me off, because if there is high momentum, then that means that order flow is strong in that direction. So that's kind of one of those. Yeah, you see, like you did get a reaction, you did get that move. Yeah, so here, right, like I said, I would have wanted a reaction internally, like I showed in the previous chart. Here, what you see is that there is a bullish move here, but once that bullish move is there, you can clearly see there's a point of interest here. So if this point of interest is to break, as it is your trailed stop, then yes, that is the perfect place to close. Yeah, this is perfect. The perfect management, I would say. Perfect management. Yeah, but it's still just a hunch, bro. Even if it's low volume with high momentum, it's still just a hunch. There is no model at play. There's nothing there. It's just a high momentum move with low volume. So yes, you can anticipate maybe a potential transition, but just because you're anticipating a transition doesn't mean that the transition is there. So yeah, just it's always internal model, external target. That's all it is. Internal model, external target. Not internal model, external of external target. That is how you get high risk to reward per se. But I'd rather guarantee my small consistent wins rather than aim for home runs. Yep, exactly. Same here. Same here. We have a good amount of people on today, about 30 people almost. Nice. Do we have any more case studies you guys want to show? Something I haven't looked at in a while is EU. Oh, and speaking of this here, 100% I would trail my stop there. 100%. Speaking of that, I know that's already securing what, a 1 to 2? 1 to 1.82. Like I personally, I would I probably would have even trailed here if I'm being honest. Just secure it, in my opinion. Would have secured a 1 to 2. That's probably where I would have secured, just because I don't want to see this POI give me a big reaction. You know what I mean? We'll come back to that in like 10 minutes. I wonder if this move will sustain itself. There's already been a reaction here. And maybe? Yeah, there's a M10 candle here that's reacting from right now. I haven't seen this in a while, actually. Yeah, see, like this, there's a break of structure here. Therefore, this POI, you're picking a low internally because internally you're bearish. Like, it could work out. I'm just saying that internally this is still bearish. So if you want to be reaction based, then you need something, right? You need some type of model, right? Because obviously we have a CBOS, so this still anticipate this to run the lows. If it doesn't run the lows and breaks here, it creates an internal range, and that gives me a bullish scenario. I just think this is a bit aggressive, right? Okay, so we sweep liquidity internally. Is there an engulfing? I do like the engulfing. The engulfing is a good sign. But yeah, you see what I mean? Like I said, CBOS. Therefore, I'm still anticipating this to continue running lows, and did run lows. So because it ran lows, you have an internal high, low. So that gives you a perimeter to play off of, with the target being the previous low. Because this high, you've now technically swept liquidity, broken structure. That's why internally I said we are bearish. Internally, again, you're still bearish. You have the CBOS create a new LGC range. That's why you're still bearish. That's why I said that you need something here, right? Like when can I be bullish here? It would be once this breaks. Well, if this is to break and it didn't break this low, in my opinion, right? Because it could still just be some type of whiplash, because that's exactly what happened here. We do have, right? You can potentially argue there's an LG here, right? But if there's an LG here, once this point breaks, that now makes it bearish again, because this is the internal range, the internal bullish range. So if this was to continue bullish, it would have been here. Let's see. I wonder if this will play out. But yeah, any more case studies? Any more questions, concerns? Wonder how this will turn out. Okay, external bullish. Yes, it's OFD. I would more so say this is a sweep potentially. No, there is no transition here. But yeah, there is OFD. Equal lows have been generated and taken. You do have technically OFD here, but more than anything, I like the high momentum here that's coming into play, which means that the pullback is semi-corrective. And you see, I probably would have done this because this is the final sell to buy. Just to guarantee that I get in the trade. That's why I use the ranges and not the candles. Because you can see there's a break here. This is the final sell to buy. It's just being a little bit more conservative. Don't look at the candle, look at the range that creates the final sell to buy, buy to sell. Because technically this is a bit of a reversal. Technically. Yeah, I mean, just try your stop then. If you get the entry right, just try your stop then. There's no reason to close early. You should just guarantee profit with the trailed stop. Yeah, I wonder if this is going to end up hitting TP or if it's going to reverse. And this is why I trail my stop, right? Here you can see this kind of live a bit. It's the reason why I trail it is because there's two things that can happen here, right? Because we've swept this high, we came into the POI, and then we got the internal LG with high momentum, right? This last buy to sell here could potentially be a bearish move. Is this something where I would sell? No, I probably wouldn't sell this because we didn't sweep liquidity, so it's not a sweep model, right? Or this can just continue into the TP. So are you willing to sacrifice 2R to generate 2.7R, right? Or do you want to just guarantee the 2R, right? Because obviously if this does give the bearish reaction, this 2R is no longer guaranteed, right? And you're now potentially risking losing 1.2R ish. So, right, if we're guaranteeing the 2R, right, the risk to reward now of losing, right, let me actually show you this. Let's say hitting your second, right, this is now your new risk, 0.55 risk, so it's negative RR, right? That's why I'd rather just guarantee it. Does that make sense? Does that make sense on why I'm saying that? Yes or no? Maybe so. But yeah, either way, your TP looks like it's going to hit. So yeah, I'm more so just trying to play both sides and trying to make sure that the probabilities align in the best way for the particular scenario that's being shown to me right now, if that makes sense. Because it does look like this is going to continue higher. I doubt EURUSD is going to continue higher. The reason why I doubt it is just because this is a bearish break, so I wonder if this is just going to give a reaction and then continue lower. Especially after the sweep here potentially. So this, just off the bat, high momentum, low momentum. Like, yes, there is a potential SD here, but I don't like how efficient these candles look here. right? It's like the scenario with gold. Not that one. It was like my scenario with gold here, right? Like it worked out, right? But for example, we confirmed the sweep, but there's no candles to really play off of. So when there's no real candles to play off of, nor is there like a full sell to buy, the sell to buy would have been here, right? Then I'd rather just let it go. It's just efficient price action, right? Lots of wicks, lots of wicks. That means that if there's lots of wicks, there's lots of effort. So if there's lots of effort, then this should continue higher. Just momentum. Yeah, like you have to anticipate this to continue higher. Like this is momentum. So yeah, I don't think there is a playable way in pretty much either direction, right? Unless you're wanting to trade the entire sell to buy. Right, unless you're trying to take the whole sell to buy. And why there, if you're asking? Because there is a solidified high here. This is the last time we broke a high and then created internal bear structure. Then this gave the sell to buy. Let's see, did that smash your TP? Hope so. Oh, it hasn't yet. Yeah, it hasn't yet. See? Interesting. I actually want to see this play out, so I guess we can stay on stream until this plays out. Sure.
Thank you very much. It's about the liquidity grab and structural disruption concepts. I find out, or I noticed that if you see most of the trades I sent, like the ones you analyze today, most of them, and I've just found success with order flow disruption more. It has made more sense to me than liquidity grab or structural disruption. So my question is there like are there extra concepts to liquidity grab and SD, because with order flow, it makes more sense. A failed POI, and I find 90% of my trades or order flow disruption and their sources. But when I try to do the liquidity grab or structural disruption, they tend up to end up in loss most of the times. So like, are there extra concepts to liquidity grab continuation and structural disruption, or is it okay with just sticking to order flow disruption? Because I don't mind. I find success there than any other model.
Well, no, bro. There's absolutely nothing wrong with that. If one model works for you, all you need is one model, right? Let's say it just depends on the type of trader that you are, right? The amount of opportunities you get depends on the type of trader that you are, times the amount of pairs that you trade, right? But the amount of pairs that you trade is directly influenced by the type of trader that you are. So if you're a scalper, right, like me, I don't really need more than one pair because I know I will get some type of opportunity every week, right? So if that's the case, then now it's just a matter of how many models am I going to attempt to use, right? So obviously, for the most part, my models revolve around the OFD, LGC, the sweep, and the SD, right? If I see any of them play out, I will more than likely take them because all of them are backed by the rules that I use. But I don't see anything wrong with only sticking to one model, right? There's absolutely nothing wrong with that. All you need is one model. Who's to say you can't become, a very, very good OFD trader where that's the only thing that you trade, right? Exactly. Exactly. So you can't understand an SD if you don't understand solidified points and if you don't understand unwillingness, right? But you can't understand unwillingness without solidified points. But at the same time, like you can't understand OFD either without solidified points, right? Like for example, is there an OFD? Yeah, there's no OFD. We can argue there's an OFD here. Let's go to 30 seconds. Right, so an OFD, right? The only way to confirm an OFD is if you have a reaction based off of a POI that then fails. So the criteria is you need a point of you need to know what a point of interest is, you need to know what a reaction is, and you need to know what a break is. Right? So obviously, right, to simplify points of interest, buy to sells, sell to buys. That is the simplest way. And look, TP hit. Well done. So I have a point of interest, right? A reaction is, right, an internal break of structure. But how do you know about an internal structure break? You have to know solidified points internally, right? So, right, also in OFD is technically in SD as well, right? Not always, but sometimes, because, for example, here we did not break, right, the low created from, let's say, high into low, retracement, unwillingness, break. So this is also technically SD, but some people can only read it as OFD, right? Because really, all of my models, if you want to really simplify all of the models, they're all LGs. LG. If you can understand the LG, you can understand solidified points. If you can understand solidified points, you can understand pretty much all of the models. Yep. That's why I don't know who has been active on the streams, but once we do start working on the workshops, right? The workshops are pretty much small ticket seminars that I'll be doing hopefully like once a month, or maybe doing one session a month, one English, one Spanish. That's why the first one is going to be market structure, right? Because if you go to the book, let me pull up the book preview. Right here. We pull up the book preview. Right? Everything here is kind of in order, right? But for me, one of the pretty much the most important part when it comes to the technical side is market structure, right? That's why I have, that's why I have everything here. That's why I have structural anatomy, right? You have to know, or you have to be able to classify time frames. You have solidified points. Is how do you find structural ranges through solidified points? What is a solidified point? A solidified point is created once you have an internal break, right? And then what is a CBOS? What is a reversal BOS? What is a full break of structure? Because there's really only a certain amount of breaks that can happen, right? It's a continuation break of structure, which is the start of the pullback. It's a reversal break of structure, which is an external CBOS because price is fractal, right? And then there's, which would then be technically the sign of reversal, whether it's based on a sweep or based on unwillingness, right? And then there's the full break of structure, which is, for example, a pro trend continuation break. Where is this? Yeah, right. So the full break of structure, that is the full break of structure, right? I don't really use that one too much, but it's just, one time somebody asked me, it's like, what do you consider this? I'm like, oh, well, it's not a CBOS and it's not a reversal BOS, so we need that. And then obviously you cannot understand invalidation points without solidified points. You can't understand LGs without solidified points. You can't understand no man's land without solidified points, obviously, right? If you have an internal range, you have a pullback, be confirmed, and then you have unwillingness. So now you're stuck in a range, right? That's no man's land, right? And then unsubstantial new highs, sweeps, and then obviously selecting time frames, understanding trader types. I don't know if I included that in the preview. Let me see. No, I didn't. I think I showed it on a stream a couple of months ago. But the entire basis of the technical side is the market structure side. And once you combine that with just understanding liquidity, where you need fuel to pretty much drive the vehicle, once you get that, you put the structure in. Now you just need to find entry models, because now you have the direction, you have the timing, so now you just need the excuse to enter. So that's why I pretty much made this book, right? This beats making 30 videos again, if I'm being honest. I think it's the bedrock of fully understanding the style, if I'm being honest. That's the basis of what I do, how I do it, solidified points. Because so let me ask you guys a question, because I'll be honest with y'all. When the solidified points idea, it wasn't created by me. It was created by two of my admins. Two of my Italian twin admins that I haven't talked to them in a while. I wish them the best. I love those kids. But they were the ones who brought this idea to me. And then once I started really trying to build a rule set over it, that's how solidified points came into being. So is there like anything else related to that? Where did this originate from? Is there anybody else teaching something similar? Like, I'm actually very interested, because I have not seen it, if I'm being honest. Like, this is an ICT thing. It's not a SMC thing. It's not a Fibonacci thing. I don't know if you guys have seen anything like that. Yeah, like, I have no clue either, bro. Like, but like, I don't want to say that I created it. You know what I mean? Like, I don't want to say that, like, you know? When am I planning on doing the first workshop? I'm gonna try to finish the presentation itself by next week. Right? So, I guess just to end this off today, for the people that don't have the book and stuff like that, let's see. Nope. Oh, here. Right. I did make this small announcement last week in terms of the products and services. I'm also hoping to revamp the website soon. But for the people who aren't in the Discord, I have created some really good incentives for the community. Like, my goal, right, obviously, is to keep doing these live streams for as long as I possibly can, as consistently as I possibly can. But my goal is to pretty much weed out the good people from the free Discord into the premium Discord, because then that would incentivize the same culture that's already in the premium group. But the premium group doesn't have, let's say, everyone being active every single day, right? So the goal is to obviously get the good, weed out the good people from the free one into the paid one. That's why I also have the group pay option, or the group buy option, sorry, which is like, if multiple people want to join at the same time, like, hit me up, we'll negotiate something. But more importantly, because you are in the premium group, you get discounts on everything else that I do. So eventually, I want to be able to have those discounts pretty much pay itself in terms of the fee. Right, I want to be able to do enough books and workshops, and if you choose to do this, also includes one-on-ones. Like, the one-on-ones are cheaper if, or even if it's like a 1 to 3 group session, they're all cheaper in the premium group. So yeah, those guys are some of the smartest kids I've ever seen. Like, we all took an IQ test like a couple years ago, and they blew me out the water, bro. If I'm being honest. Yeah, I haven't seen anything like that around it, and so now, pretty much what I want to do now is just kind of be able to coherently explain my trade so that you guys can then apply them, because then obviously that helps the culture of the group. Because obviously, like, over the past 5 years, we've seen a lot of improvement and a lot of people. Like, there's people that are in the premium group that gave me backlash when we did the transition from the old RCV to the new RCV, but are now killing it. You know what I mean? That's why I kind of blew off the fact that they were kind of not necessarily coming at me, but I did get some backlash from it. But I'm like, no, bro, just lock in. You will be fine. And guess what? He's doing really, really good right now. I'm not going to say his name, but he's doing really, really well now. So I've seen this process go back and forth with, I would say, about 50 people now. So I really want to be able to streamline that. Any trading psychology gems? I have no clue, bro. Depends on the topic, situation, scenario. In the aspect of derivatives, yeah, bro, 100%. Because I have yet to see more than 5 people ever trade exactly the way that I do. You guys are taking different positions than me on the same pairs using the same concepts. What does that mean? That derivatives are a thing, right? Even if we derive from the same information, the application is never going to be the same, because when we open this chart, instinctively, both me and you will see different things. No matter what, right? Like, maybe some people instantly know, right? Unwillingness, break, right? Maybe that's the first thing they know. Maybe somebody else notes, oh, okay, we have an internal range here to play off of after this break. Maybe somebody else sees, oh, we've broken this, therefore we are bullish. You know what I mean? So, JC, give me some time, bro. Give me some time. I've seen your messages, bro. Please be patient. Give me time. That's the third time. But yeah, guys, any more questions, concerns? Yeah, but no worries. I usually get to DMs in the weekend, so usually Monday to Thursday, I typically don't really answer many DMs. Okay. ALX, are you in the free channel, bro? Do you have the chart for that? I'd like to see that. How do you use this on the yield? On the. I'm assuming that's bond. Yeah, it's a bond market. Do you have the chart for that? I'd like to check it out. Let's open that here today, and that'll be the last thing for today, and then I'll go ahead and wrap today's call up. But do you happen to have that chart? Cool. we tried trade of it yet? No, I have not. I haven't tried futures yet, bro. No, I have not. I just like what I'm already doing, bro. I have like for example, CoinEx is the only unregulated broker that still has MT4, MT5 licenses. So it's just like if it ain't broke, don't fix it. Yeah, you know what? I should ask them for like a referral or something, bro. Like, I need to make some money off these guys. Like, I've actually never had like a broker deal or anything like that. I should really hit them up because I've been using them for years. I wonder how much they charge for a white label too. Well, in what aspect? We talking financially? We talking um culture wise? Talking would I have a broker soon? Um, I don't know. I mean, that's a completely different game. Right? Like trading to then brokering is a completely different game. But I mean, if I did have the opportunity to, I would love to have something like CoinEx that not only is how do I say this? It is not only that not only has their medical licensing, but for me, the most important things when it comes to a broker, it's I was having this conversation with this guy that I know wants to open a broker, but I don't know if he'll follow through on it. But it's pretty much like the most important things when it comes to a broker, it's the execution speed, execution accuracy, right? If when I'm hitting buy, I'm not getting a bunch of slippage, right? Obviously you get slippage if you put on like 40, 50, 60 lots, right? But you should not be getting slippage after a lot. You know what I mean? At least nothing crazy. So execution timing, execution accuracy. Number three, it would be low spreads. Number four would be I know I'm missing something because I know I wrote this down. I completely forgot. And it was one more thing, right? Because if you can guarantee those, then it's justifiable to charge a little bit more with swaps and commissions, right? Because not only will that give breathing room to, you know, get marketing money, right? But for me, the most important things is execution accuracy, execution, or just everything being good with the execution, low spreads, and I keep forgetting the last one, but no culture and teaching student ways. I mean, in terms of like the Endura thing, the most important thing that I think that has occurred this year is that this is kind of streamlined. This is ready to be scaled up. You know, like maybe not scaled up to like 50, 100K just yet, but like I now have enough breathing room to where this does not take up too much of my time, and I can still focus on other endeavors while still maintaining a community where I don't have to be active every single day for it to be, active. So I would say overall it's been really good. I don't think I've ever talked about old RCV concepts versus new RCV concepts. It's all RCV. Stuff we used back in the day, we still use today. Momentum was like probably one of the main ones. Like I don't want you to see RCV as a strategy. It's a catalog. It's a catalog of a lot of things, and if you want to use certain things, cool. Figure out how to frame it in your own way. Mm. Yeah, yeah, it is. It is like I know a white label these days would probably cost like $250,000 at least. Oh, I figured it out. Yep. So execution accuracy, exit and obviously there's no slippage with the execution, low spreads, and being A booked. If you can guarantee being A booked, low spreads, and execution accuracy, then I think it's okay to justify a bit more on the fees. Because let me tell you, almost every broker is probably B booking you. Almost every single one. Like, I don't know if you guys heard about that Don Vo thing where he blew like $1 million live or something like that, $3 million live or something like that. I don't know if you guys heard about that. But yeah, any final questions, concerns before we wrap this up? I mean, yeah, bro, why would they show that? Why would they show that? Yeah, like it was on Blueberry Markets, like it was like a PAM account or something like that, and he blew like $3 million in a couple of hours, I think, or something like that, or in 3 days, or something like that. But I'm like, yo, like that was a complete under the table move, like 100% planned. Like don't be stupid, you know, like that was 100% planned. And guess what? Blueberry did not A book those transactions; those were all B booked, 100%. They just made $3 million, like insane. Yeah, I think the only prereq a market needs to use these concepts is just a lot of history. Like for example, I don't really like too much crypto just because there's not enough history. That's crazy. Yeah, man, it's insane. Like, I mean, brokering is really where the money's at. Like Wall Street itself, the stock exchange, it's a broker. They don't make money off. They make money off fees. That's where pretty much the majority of their money comes from. Brokering is where the money's at. Yep, fees and commissions. Yep. But yeah, I mean, if I could ever have the chance to open a broker, that would be really dope because I would actually go about it the right way, as long as the numbers make sense, of course. But that would be cool. It's just a different game. It's not a game I understand. Yeah, man. I'm probably gonna wrap this up here, unless we have any final questions, concerns. I'll see you guys next week. All right, guys. Have a great weekend.